The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 28th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 17 points, 25,643 is the print. S&P's up 3, NASDAQ up 7, semis are off 2. Kind of a mixed bag out here. Spot volatility index well below its 50-day exponential moving average. It's trading at 1584. I believe it's 1599 is the number. Goldilocks back $21.30. That's a June contract trading out of 1295.60. Silver down 32 cents. That's 2% to the downside. Light sweet crude off about 0.5% or 30 cents out there. If we take a look at the leaders, dollar-wise, to the upside, we'll see it's Lululemon, lemon meringue pie. That's up 22 bucks or 15%. PVH Corp up 15% as well. 17 buckaroonies. Mercado Libre joining the pack, $16, but only up 3.5%. Tricida, try something or other, is up 41%. That's 9 bucks. So you've got Wabco Holdings off 14, pretty popular number. $14, that's nearly 10%. Rebonds Holdings down 13 or 46%. Aberdeen Standard down 7% or $9. So plenty to look at, of course. We're going to look at what you want to look at. And so let's go to our first requester out here, coming in by email. This is from Robert B. So let's see. Robert B. says, Steve, would you share your thoughts regarding a short position? Robert, yes, I will. Give me a second here. A short position inside the XLF. Is now the right time? I prefer to use the daily and the weekly charts, and my time frame for holding XLF will be 1 to 2 weeks. So let's go take a look at the XLF. Let's do this. Let's look at a daily time frame chart for the XLF. We'll go back and take a look at the multi time frame, as Robert was alluding to. But here's what we know about the XLF at this stage here. A couple of days ago, Robert, price had pulled back and tested a level of support. This is this red solid line. You'll see 2 solid red lines out there. Each of those represent the Tommy DeMark setup trend line, just the two most recent out here. And that was set up by the January 17th low. The low on that candle session, if I've grabbed the right date, is 25.17. Support. So support is held. You're asking me, should you go short right now? You'd prefer. Now, one level of support did fail. Absolutely. And that was on the low of February 14th, and that was 25.73. So you can see the range out here. We also have a brand new profile that formed a few days ago, 3 days ago to be exact. That's 25.28. So if you're looking to go short, we can also see that Stevie's green line has turned red. Now, what that typically means, Robert, is that price and Stevie's red line, in this case, will catch up to each other. We don't know if it's a combination of a couple of different things or one thing. In other words, price could just zoom up there today. That would be 25.95. Or is it going to be a combination of price moving higher to sideways and the line itself moving lower? Any of those possibilities. You're just looking for a test, and then it will be revealed to you on that test. If price tests, rejects, means trades lower, then you've got your short position as opposed to, let's say, right now from a daily perspective. A close above it says not so fast. You would be watching for the 26.29 level. So to summarize, and just looking at the daily time frame chart, for the financial sector out here, all prices done after it made kind of a got up to resistance. By the way, resistance, we were looking at the red line earlier. We can look at the green line. That's resistance set up by the opposite of the Tommy DeMark setup system out here. And you can see that, by the way, that high was 27.01. So price ran into resistance in the XLF where it did. Price ran into support where it was supposed to as well. So you're kind of in no man's land, but that's not true, because you and I are anticipating a test of price and Stevie's red line to really reveal to you what the true intentions are. Now, if I just come back here just to go ahead and close this out for you with regard to the XLF, if we take a look at the weekly time frame, in this case here, we're just going to look at profiles. What this is communicating to you, Robert, is not so fast. And the reason is because the week of January 14th, you saw a close above the top of that box out here. What took place last week, what's taken place this week, is a test of that level. That's 25.30. Old resistance has now become new support. You would really want to see price below that, especially on a weekly basis, 25.30 that is, in order to set up the so-called short position inside of the financial sector, the XLF. So hope that helps you out, Robert. Thanks for writing in. And let's see who our next requester is. Next one is David G. David G writes and says, hey, Steve. So, hey, David, I've been using the Heiken Ashi. I think that's the proper pronunciation, but I could be wrong. Some of you might just call it the Heineken candles. But David would call appropriately so the Heiken Ashi candles for a little while as a secondary indicator. I'm wondering if you're familiar with them. I am familiar with the candles. Could I comment whether you think they are useful or not? If they're useful to you, they are useful. I am not going to convince you otherwise out here. And if you use them, I am familiar with them as opposed to use them per se, but we're going to go take a look at this for you. Because if you've got a question, somebody else has a question out there. Maybe somebody out there is a Heiken Ashi master, an expert, and maybe they'll email me, call in, something along those lines. But let's get to this question out here. Could I share any insight? And I think they are helpful with finding the trend intraday. Is it okay if we look at it more of a longer-term standpoint? I guess it will be. We'll do that when we come back from this break. Heiken Ashi. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 26, S&P is up about 4. So David G wrote in, was asking us if we could take a, he's using these Heiken Ashi candles. Let me show you what they are. And as an indicator, and I like the idea of using it as an indicator. So many of you may not even be familiar with this style candle. That's on the left-hand. So here's a chart, daily chart for the Dow. The left-hand chart is using the Heiken Ashi system, and the right-hand chart, just your typical Japanese candlesticks out here. Now, here's what I recollect about the candle formation out here. First, you'll see that they're totally different. Now, the colors are that we have in the system, and on my system, the way that I've got this, the signal system, the green candles are referred to as, you'd have to refer to them as bullish, the red ones as bearish, but there's more to it than that. I'm just kind of simplifying things, and they really are not going to necessarily represent the actual candlestick that we would take a look at on a daily basis, although the candles here, I'm using a daily chart. These are daily candles. For example, if we look at the candlestick when the Dow made its low on December 26, it's very clear that that is a reversal candle. We can see where price opened and closed, the intersection high and low out there. What you don't really see out here, because the open of a Heiken Ashi candle, if I'm correct on this, is the midpoint of the prior session out there. So if you take a look at this in here, let me get the arrow out here so you know where it is that I'm looking at. Here's the candle session, same date. This is the 26th, and see where the open is. It's at the, in this case here, it's at the real body, the open of the body, the candle. That's really the midpoint. If you take a look at the very next session, it's the midpoint of the prior. So each of these opens out here are really at the midpoint of the prior session. Now, the high or low, the high is going to be either the greater of the high, the close, or it could be the low, and the low is going to be the lesser of all three of those as well. The way that I recall that you are using this, or that you would consider using this out here, is really where where you're taking the midpoint of the prior day, and if that happens to really be the low out there, that's bullish momentum. And so you just don't see any wicks at the bottom of the session. When you start to get wicks, it's in Heiken Ashi terms, kind of an uncertain. It's not neutral, but potential change in trend. Just a uncertainty with regard to utilizing that system out here. So, look, I'll come back to this, but I see we've got a caller on the line, and we'd like to go to live bodies out there. So let's go to Brent. Brent, thanks for calling. Thanks for holding. How are you today?
I'm doing quite well, Steve. Thanks so much for taking the call, and didn't mean to interrupt what you were talking about.
No problem. Hey, do you use? Have you ever used Heiken Ashi candles?
I can't say I have, actually.
Okay, all right. Well,
I use plenty of other things, but I can't say I've used that.
Hey, no problem, no problem. So you want to take a look at gold. I was wondering how long it would take before somebody would want to take a look at gold. Trading up $21 right now. So tell me what you're looking at or how I can assist you. Or both.
It seemed to be on the GLD and on gold itself that it's heading towards a swing point. And it's a little tricky maybe with the contract itself because I know we're transitioning from one to another, but at least on the GLD, it looks like it's going that way with some volume. So I just wanted your thoughts on that. And then if you had a chance to take a look at oil, because it seems like it was down this morning, but it's hanging in there better. It seems like it's kind of keeps testing support and hanging in there. So that's the two I was hoping you could look at.
Sure. So let's look at that. So what Brent is pointing out to you folks is if we take a look at the ETF for gold, GLD, the swing point he's referring to is the one from March the 5th, and that swing point has 7 million shares out there. And today we've already done almost 8.1 million shares. And Brent is looking at the high of that candle session, 121.73. The low of our session so far, 121.70. So price has tested that. It's rejected it, but it's done so on volume. And what Brent knows is that typically what we would see out here is if you're moving into a swing point with volume, even if you reject it, price is going to come back down there and test that level. So I don't see anything wrong with that scenario out here. But I think what you and I will do is we'll just go to the gold contract and try to look at some other things as well out here. Now, before I do that, give me some of your thinking here with regard to, are you looking to trade gold, the mining equities? Give me some feel for, and what are you leaning towards? Or are you looking at short?
There are some of the mining equities that, of course, are run up with the price of gold, and I'm thinking if this does form an AB equals CD down, that would be at the, as it completes, that would be an area I'd potentially be looking to go long. I'm not at this time in any kind of trade in regards to it.
Okay, all right. So here's what we know about gold. Let's do this. Here's one of the things that we know about gold. I'm going to put up the daily contract, the current contract, the June contract. And first of all, the bar itself is a gold-colored bar right now. And it would indicate that a new profile is trying to form. Whether it does or it doesn't, we're uncertain, or I'm uncertain, but it gives you a signal of a possibility. But what we do know, Brent, is that the bottom of the daily box is 1292.60. The bottom of the weekly box is 1295.10. We're trading at 1296.20. For those that would be an aggressive trader, now would be the time to take a long trade in gold. And the close on this, you would close this out, I would say, if price were to close below 1287.50. And that's the low of the trading session from March the 7th. Because if there's a close below that, we just take a look at volume, so we saw some accelerated volume. And if there were a close below that trading session, it could set up the A to B equals CD pattern. Now, I'm not sure, Brent, if this was the A to B equals CD pattern you are looking at or potentially targeting, but this would give you a price projection of 1262 or 1243. We're not there yet, but are you looking at this as the larger A to B equals CD pattern potentially?
Yes, I am, Steve.
Okay, so here's what we know. Right now, price is up against support. I would say if it's going to come to fruition, the A to B equals CD, you're going to see a close below 1292.60. But right now, support has held. So which one is it that's going to be correct here? Is there any way for us to figure this out? The other thing that I would just throw out here, Brent, is the 5-hour time frame chart for gold. It already does have an A to B equals CD to the downside. It's made the 1 to 2 A to B equals CD. That price projection was $12.94. Again, we're at $12.95 and change right now. If we were to see a bullish reversal signal, and I don't think we're going to see it by 2 o'clock. I don't think we're going to see it at 5 o'clock, but we could see it tonight or early in the morning out there. That would signal that we have a Gartley buy pattern in play out here. So if you want to stay on for the break, we'll come back, answer other questions here, and then take a look at light sweet crude, okay?
Yeah, I'll do that, Steve. Thank you.
You bet. We'll be right back with Brent from Martinez, California. Steve Rhodes with TFNN. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're on the line with Brent in Martinez, California. So just one other thing, or a couple other things, Brent, if I could, for us taking a look at gold. So we've established that gold has pulled back to support both the bottom of the daily and weekly profiles out here. And if we take a look at its horizontal trading ranges, and the green ones, so they're only green on my chart right now, represent the weekly time frame out here. And on the weekly time frame, and support here is the number I'm going to give you, which is 1292.30. And we're trading at 1290 right now. I've got a little bit of a trend line that I just simply established from January 21st, that low, and then March 4th, the week that began there. So this should be a good support area as well. If price breaks through there, I don't recall the A to B equals CD pattern, but this would say price would move to 12.25. But right now, I'm saying that support is held on this pullback inside of gold based upon the chart data that you and I are looking at. The other element to consider out here is the mining equities themselves have held up pretty well. A decent pullback today, no doubt, but volume is about 23 million shares versus about 60 million shares from March 20th. A breakout or a break higher on March the 8th was 60 million shares as well. So where we saw volume inside the GLD, we're not seeing it, let's say, inside the mining equity area. So does that if you're going to ask me what does all that mean to me, aggressive traders would take a stab at gold or the mining equities like now. But you have to use stops.
No, I appreciate all the analysis. I'm going to be patient and see if what I think can potentially happens. That gives me the support levels if that's broken. I know Fridays can be kind of fun and gold. We'll see what happens both directions.
Absolutely.
So
Absolutely. So I just wanted to throw that out there for you. Now, with regard to light sweet crude, what are you doing here? What are you looking at? What are you looking for?
I'm still long, like I talked to you last time from way back in December. So I just seemed to me that it's hanging in there pretty well. It hasn't, it got above some levels, and it seems when it does back down, the buyers come in and it has support. So far it looks okay to me. I just wanted to see what your thoughts were on it.
No, absolutely. It does. And so, folks, we're looking at the daily, the May contract here for light sweet crude. And as Brent is pointing out, and very similar to what we looked at in gold, light sweet crude is holding support. The support here is the bottom of its daily profile. And so for the last 5-6 trading sessions, we've seen price trade with inside this box. In other words, just really consolidating between the top and the bottom. The bottom of the box is 57.95. The top is 60.39. So relatively small range out here. Brent, if I pull over my other charts and we look for any topping signals or what have you, we can see that when the high was made, it was done with a Tommy DeMark setup 9 count. Now, when you get that 9 count, there's 3 different things that could take place. One of those things is the sideways move. So the sideways move is what's in place. There's no reason to change that position. There's no support that's failed. Utilizing this system, this would tell us that support would be below the bottom of that daily profile and instead would be the low of March 11th, which is 56.27. So I don't see any signals here on a daily time frame that would actually everything I see in a daily time frame suggests that you do what you're currently doing.
All right, that sounds good, Steve. I always appreciate your help, and you just have a great day and enjoy your weekend.
I'll do that. You do the same. And watch the 65.40 level. If price gets over 60.39, that should be your next target to the upside. That was Brent in Martinez. You're very welcome. Brent Martinez, California. So let's go back, take a look at those Heiken Ashi candles out here. And so we're talking about there. You look at the left-hand side of the chart. And so in essence, it's a momentum-based type trading strategy to the upside or the downside. Just recognize that the difference in the candle is always going to be that big, well, not always, but most of the time is going to be that beginning point, because the beginning of that candle, the open of that candle, is going to be the average of the prior day's candle session out there. If I were to try to apply my other tools, David, to using that, here is the same chart for the Dow using the Heiken Ashi. Let me do this here. Let me pull this over, and let me pull this over. So just like we're looking side by side, but just a couple of Stevie's tools out here. We can see how we can generate the same 9 counts. We can use those levels of support and resistance out here. We can use Stevie's red line, green line. That assists us with the momentum of the market as well out here. So do I use them? I don't. But I need to be trained perhaps by someone with your experience as to best uses. But if they're working for you, you don't need my help. That's for sure. So thanks for writing in. I hope I've added or at least been able to allow others that might be interested in taking a look at that set of tools to add to their arsenal out there. So no other questions that we have. There is one that came in Tiger's Den, and I believe that was Ruby Tuesday. And Ruby Tuesday wanted to take a look at palladium. So let's go do that for her. Let me switch over here to a couple of charts. Let's take a look at the profiles for palladium. And palladium, I believe we're using the June contract. Is that correct, Ruby? And the question was or is, where do we see support? So unlike the daily time frame for gold, unlike the daily time frame for light sweet crude, palladium has busted right through support. It did that yesterday. That level was 1438.20. That was the support of its weekly time frame out here. So that is not really that good. So now, what am I going to do? What am I going to do? I'm going to come out here and take a look at the. This does not bode well. Prices below the prior to set up trend line levels. I can't on a daily basis really develop an A to B equals CD pattern out here. What is Stevie going to do? Give me a second. Let me see if I have a synthetic contract set up for palladium. I don't recall doing that, but I'm going to look anyways. Did I do it? Did I do it? I did not. So now what? Now what? You know, when in doubt, do something else. Let's take a look at the continuous contract for palladium out here. Give me a second to pull that up, and let's just look at the see if I can get the weekly time frame out here. So Ruby, probably I can't provide you with much more than what you've probably already done, which is look for a retracement. So this thing is pulling down hard into the 0.382 level of 1285.90. With it being such a wide-ranging bar on a weekly basis, the widest ranging bar the palladium has had in years, because we pull this back in a lot of years out there. So what's that mean for palladium? Basically, it can't mean anything good. So where's your target? I guess at this stage here, I'd go with the 1106 area to the downside, but you know, we'd want to go ahead and take a look at patterns. I just don't have any pattern on any time frame just yet to provide you with anything other than not good, the way that this thing has broken through daily and weekly profiles. And Tommy DeMark set up trend lines. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
S&P's up 3. No questions that I see, none in the den, none in by email, and certainly no one on the line at this moment. So what do we do here for the next 8 minutes or so? Wait for a question. Nah, we'll continue to poke around. Here's what's going on inside the equity markets. Kind of boring to a certain extent out here. But here's what we do know. If we take a look at the ES Mini, the NQ, the Dow, and the Russell 2000, we know that today in the ES Mini is the third time prices tried to bust through the bottom of that box, 2,800.25. Now, closing below the bottom of that box would be troublesome for the S&P 500 because it would signal a change in trend. Whether it holds or not, we don't know, but it would signal a change in trend since the bottom from December the 26th. Hasn't happened yet. Has not happened. Support has held. Support has held. Support has held. Do you know what I mean? I mean, support has held. If we take a look at the Russell 2000, we now do have a cemented new daily profile. We weren't sure yesterday, but today we're sure. It's been in effect for 2 days out here, or I'm pretty sure. The bottom of its profile was tested, 1521. It has held. The top has been tested. It has held, 1537. Watch either of those for a clue. A close above 1537 inside the Russell 2000 would suggest to me, would suggest to you, higher price out here. Now, on the June contract, let me see if I can turn on weekly profiles out here. Let me see if I've got those to give you where that price target would be to the upside. I'd have to say 1573. Watch 1537. That's right. 1537 and 1573. Close above 1537 says you're likely to see a price move to 1573. Otherwise, we're just stuck in this little trading range, this little sideways thing, kind of like we just looked at in light sweet crude out here. If we look at the NQ, the interesting thing here is that today's high stopped at its point of control, the center of its box, the price level where both buyers and sellers believe it's fair game to go ahead and fire away. 73.77 is that number out here. We're trading at 73.37, 40 points lower. What's that mean? Jelly bean. Doesn't mean anything. Just means actually I'd kind of give the sellers the upper hand here, but not so much that they've been able to even push price down to the support level, the bottom of its box, 72.44. So do we got? We got uncertainty, so to speak. We're going to have a breakdown. We do not have a breakdown inside the NQ. We do not have a breakdown inside the ES Mini. We do not have a breakdown inside the Russell 2000. Do we have a breakdown inside the Dow? We do not. Price is sitting right now on its point of control. That level is 25,684, referring to the daily time frame out here. Yesterday, price tested the bottom, didn't bust through it, bounced off of it. Today, we're sitting at that point of control until we see which way price wants to break, above or below that level. If it breaks above that area, closes well above that area, 26,068 would be the number you'd be looking for. So where are we at inside the equity markets out here? Just really a lot of sideways action where one day the bulls feel good, or one moment the bulls feel good, the next moment the bears feel good. That's the choppy, did I say choppy? Market that we are in right now. Which way are we going to break? When we break through the choppy market? I don't know. What else do we know out here as we take a look at the markets? Well, just kind of curious. HYG, the high yield corporate bond fund, what is it doing out here? Always looking for clues and signals of lack of liquidity. And we take a look at the HYG, we don't see it, do we? You don't see it. I don't see it. Maybe you see it. I don't see it. You know, so we're not seeing any kind of sell-off here. So this just says there's plenty of liquidity. What's that mean? Busting out the lows is not easy to do. Why are these lows holding? Isn't that really the question? Because, well, one, you knew where support was at, but number two, plenty of liquidity. So here's liquidity gauge number one or number two. You decide. In liquidity gauge number two is the spot volatility index. It's trading below its 50-day exponential moving average, and that level is, what is that? It's 1597. I was wrong when I said 1599. You're trading right now at 1497, a buck underneath it. Still says plenty of liquidity. So that's what the markets are doing. I don't see any edges on the short-term time frames to give us signals. I just don't see anything. Now, that being said, the other element here, maybe a broader element, is just saying it hasn't bought into it. And the hasn't bought into it is that advanced decline oscillator. Current reading, minus 18.57. Pretty much been below the zero line since around the end of February out here, or for a month. We've pretty much been there. You can see in the New York Stock Exchange, we really haven't done a whole lot. Just a range out here for the last month. A close above zero could be short-term bullish. You would need follow-through on the next trading session out here. But again, just provides us with this very choppy market that we have inside the equity area. And I am perplexed as to what to show you out here, what to provide you to tell you something that I haven't already told you. And I don't have it. I just don't. There's just nothing else that I know of that I can go to give a more clear meaning. I wish I could. So we could take a look at the sectors in the S&P 500. Why don't we take a look at some of those? We looked at the XLF. Sometimes that can provide some clarity, right? If we're going to see a top, we're going to see it certainly in the top four sectors out here. But if we look at the number one sector, the XLK, what do we see out here? Yeah, we see the time to mark set up 9 count. We don't see price busting through support in the XLK. We see price hanging right around the center of that profile out there, which is right around the 73.19-ish area where we're trading as we speak right now. So we get the top, similar to like we looked at on the daily chart for light sweet crude, and then price did what it's supposed to do. It's in essence trading sideways. So no real clear signal here, no breaks of support in the XLK. We looked at the XLF. Let's look at the XLV. I still think that is the second weighted sector in here. What do we have here? We got nothing. We've got no sign, no real signal of a top, just other than price getting up to the top of its daily bearish structured box, which was 92.49. That contained price. Now price just really consolidating between that, and it hasn't even got down to 89.11. Are we seeing any real disasters here inside the S&P? That we looked at the XLF. Now we go to, I think, XLC, the communication sector, Facebook, things of that sort out here. Do we see any real significant top here? No, we do not. I don't see a topping pattern. I don't have a topping pattern. I just got, if anything, this is more bullish than bearish. Price is above the top of its daily profile out there. If we look at the XLY, is there any topping signal here? And just as we go through the sectors, no, this is bullish. It's above Stevie's green line out here. So the first 5 sectors, the top 5 sectors that represent the S&P 500, they're really not buying into this whole topping scenario. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 53 points right now, trading on 25,678. S&P up 6, NASDAQ 100 up 10, Russell up 9 points. So during the break, Jay in the Tiger's Den had asked if we could turn on the profile levels for each of the equity futures. I'm glad that he did that. So in the ES Mini, the high today so far has been 28.24, and the top of the box from a weekly perspective is 28.26 basically. So that's your resistance zone. A close above that suggests a move overnight in the morning to the 28.47 level. Otherwise, it's resistance. We're trading between support and resistance. Bottom of the daily, 2800. Top of the weekly, 28.25 out there. NVIDIA has been requested, NVDA, by S&P in the Tiger's Den. So if we take a look at NVIDIA, NVDA is the question. Trading in between daily profiles, trading in between weekly profiles, trading in between monthly profiles out there. Any other signals that we have? If we take a look at NVIDIA, when it made its most recent high, it did it with that 9 count out here. That was a trading session of March 21st. Whenever you see count 8, 9, or the bar after bar 9, the neck on the back of your, the neck or the hair on the back of your neck ought to kind of stand up, so to speak. Now, what NVIDIA has not done, S&P, is busted through, let's say, level 1 of support. It's pulled back to support, as any topping pattern is supposed to do. And support that we're looking at here is Stevie's green line, 175.56 out here. So here you got a small trading range. Stevie's green line, the high from the trading session of March 21st. That's out at 185 even Steven out here. I don't really see anything else significant inside of NVIDIA. Resistance 180.105 on the daily profile, but really nothing of significance there. So, folks, thanks so much for joining me today. Always fun and a pleasure to be with you. Hope you feel the same. But stay tuned. Your favorite polar bear. I mean, truly, he has been voted #1 polar bear in the world. That's quite a ranking. David White, he's up next. Tom O'Brien, 3 to 5. And I'll be back with you on Fantastic Friday. Have a great day.